AIM-listed Thor Explorations, which produces gold in Africa, has seen its shares up almost 50% since the recent lows of March this year. There's been a fair bit of news alongside the big push to record highs for the price of gold. Segun Lawson is the chief executive of Thor. He joins us now on the line from Nigeria. It's great to catch up with you again, and it's on the back of this recent rise in share price. Obviously, it got news on the gold price, but I want to begin first of all with your thoughts on where you're going this year in terms of gold production. Last year, 84,600 ounces. How's the year started this year?
Yes, first of all, thanks for having me on again. Like you said, last year was we produced just under 85,000 ounces, which was at the bottom end of our guidance, but all in all, well above the feasibility study mine plan, which was 72,000 ounces. We have, and that was really because last year was a challenging year operationally. We knew we had to mine a lot of waste, but we're glad to have come through that, and we've left ourselves very strongly positioned for the next 3 years. So this year we're looking to produce between 95 and 100,000 ounces, and we expect to be around about that 100,000 ounce mark per year for the subsequent 2 years. The other thing to note is our all-in sustaining cost this year is between $1,100 and $1,200 per ounce. So like you mentioned earlier, we're at very strong gold prices of $2,300 per ounce. We're making over $1,000 margin per ounce on the gold we produce. So we're after the first quarter, we're here to reiterate our guidance. We don't believe there's any reason why we shouldn't make our guidance of 95 to 100,000 ounces this year.
Yeah, production obviously is one thing. Input costs are another thing. You talk about the cost per ounce to get it out of the ground. Have you seen your costs rise recently? We've been talking to a lot of mining companies who have wages higher. We know that the price of oil, gas, diesel, the generating power of these big mines has gone up a lot. How are you coping with this?
Look, our biggest cost is ammonium nitrate, and the second biggest cost is diesel. So we use the diesel to move all our trucks, ammonium nitrates for all our explosives. We've seen price rises in both, so we've had to absorb these price rises. We've taken a few steps to mitigate things on the diesel side. For example, we power our mine plant using compressed natural gas in Nigeria, which is a lot cheaper. However, we've been extremely fortunate that, the gold price has risen at a faster rate than our costs have. So we've been able to absorb these price rises.
Yeah, staying with the operational results, you've acquired 2 new licenses in Senegal. How big are these projects likely to be?
Well, our existing project in Senegal, we had drilled out 1.78 million ounces of a global resource. And what we're trying to work towards now is a preliminary feasibility study. The results should be out in the second half of the year. The licenses we acquired are within proximity of this license. One of them is actually contiguous to this license. And we believe the deposit we've discovered extends into the new license due to West. So we're very excited about that, the prospect of increasing the size of the global resource without having to look too far. We've actually started drilling on Due to West, and we hope to start giving the drilling results news to the market through the course of this quarter and next quarter. And any incremental growth we can have on our existing discovery will be hugely beneficial for shareholders. When we finish our preliminary feasibility study in the second half of this year, this is going to be the first time there's going to be some tangible economic value assigned to this project. And we think there's a lot of value this project can deliver to our shareholders. We're looking at a mine life that's potentially 10 years that can also add potentially 100,000 ounces a year. So we're keen to complete our current drilling program and get these results out to the market.
Yeah, I'm sure you are. Just quickly as well, on your proposals and a granted tenure for lithium exploration in Nigeria. Again, I mean, lithium is such a talked about material at the moment. What are your prospects on this part of the business?
Yeah, our core business is gold. We're a gold producer. That's where our cash flows come from. That's where we want to grow long term. We are also a first mover in Nigeria. We have identified lithium in Nigeria as a strong commercial opportunity. We've assembled a portfolio of ground together, which we're going to drill. And this provides great optionality for our shareholders. At the end of the drill program, we can start making some strategic decisions as to what we do with the lithium, whether to keep funding it or to divest it. But it's great optionality for our shareholders. And we believe there are commercial quantities of lithium on the ground we have. So it's a case of going through the steps to prove this up and then being able to make a decision at that point.
Just going back to the financial results for 2023, I noticed in amongst the numbers that you have said that senior debt has been paid off in a significant way. Explain more about this and what you're doing to pay down the rest. I know it's been slashed quite considerably, and you're expecting to make a further payment, I believe, in the Q1 of this fiscal year. Is that right?
So our initial senior debt facility was $54.5 million. So we've been paying that down since we started producing. We made a big payment at the end of Q1 of $8.2 million. We're going to make another payment of about $8 million. There's only $15 million left of the senior debt. At the end of this year, we're going to be completely deleveraged from our debt. So we are going to be able to strengthen our balance sheet and start building up some cash to do more exciting things with, over the course of the rest of the mine life. So, we're going to be in a very strong financial position. This has been coincident with a very high gold price. And so, should we hit our targets on gold production, we will be generating a lot of cash.
Yeah. Let me just bring up a share price chart showing you what I was talking about at the beginning of the interview, where I was talking about this 50% rise in shares. There's the March lows in the middle of the screen to the recent highs, up almost 50% from that particular point. In the context of where we've come from, how would you describe investments in Thor Explorations, and what do you consider to be the prospects? I know you've got expansion plans at the Duarte Gold Project as well for this year, so there are other exciting things happening as well. What's priced in at these levels?
Look, I think fundamentally we have a baseline valuation, and I like to say if we did not find one further single ounce of gold, or we did not develop our Douta project, or we didn't find any lithium, the cash being generated from our mine in Nigeria over the next 3 years will generate $300 million of free cash flow at today's gold price. I think our market cap is, probably half that. So I believe we're undervalued, and without any of our prospects coming into fruition, I still believe there's a significant discount to our value. I think, there is a very strong likelihood that our prospects do come into fruition. We do believe we will extend the Segilola mine life. We do believe we will get significant value out of the Douta project, and the lithium opportunity still provides optionality for our shareholders. So I think we're underpinned by strong value with no debt after this year, $300 million of projected free cash flow at today's gold price, and possible growth from mine life extension and development of our other projects.
Yeah, I just looking at your market cap, it's priced on my records in Canadian dollars. I should have said at the top, of course, you're also Canadian Venture Exchange listed, 171 million. So I can see there is potentially a lot of unlocked value in this share price. You're trading at obviously a discount to what you got in terms of income. Let me just quickly ask you about the London markets in Canada and so forth. As a chief executive of an AIM-listed company, how are you feeling about things at the moment? There's a lot of disquiet amongst particularly AIM companies, but we know as well for some of the reporting on some of the major big cap companies who are dissatisfied with the coverage or the opportunities that they think they now have in London. Are you assessing your position at all and want to go just abroad, or is it in your idea to keep on the London listing?
No, I think we want to keep on the London listing. We were listed in Toronto prior to being listed in London. We listed in London in 2021. We have gradually seen increasing volumes of our shares being traded in London, overtaking the volumes being traded in Toronto. We're averaging about 300,000 shares per day now on the London Stock Exchange. being traded on a daily basis, and that number seems to be growing as well. So look, I think the more good news we deliver to the market, the more volume we'll see, and I think the better for our share price and our liquidity.
Wish you well. Thanks so much indeed for joining us again. It's a pleasure to talk to you. Nice to talk about a positive stock story where we've got stock prices going up on the back of an improved gold price. We look forward to talking to you again. Thanks, Segun. That's Segun Lawson. He is the Chief Executive of Thor Explorations.